Welcome back to the Robbins LLP podcast. Today we're discussing new allegations involving EquipmentShare.com, ticker EQPT. A class action has been filed on behalf of investors who purchased EquipmentShare securities, either in the company's January 2026 initial public offering or between January 23rd and June 23rd, 2026. EquipmentShare operates an integrated cloud-based platform called T3, used for equipment rental and construction equipment management.
According to the complaint, EquipmentShare went public on January 26, 2026. Then, on June 24, 2026, Umibozu Research published a report raising significant concerns about undisclosed related party transactions. The report alleged that entities affiliated with EquipmentShare's founders had received at least $77 million, with the true figure potentially much higher. It stated that EquipmentShare maintains a high net worth and family office channel built around three undisclosed entities: Easy Equipment Zone, Bevel Financial, and Armada Fleet Management.
According to the report, EquipmentShare's own program was used to funnel substantial fees and payments to these related parties. The report also described a web of 130 Schlox-affiliated entities that allegedly enabled extensive self-dealing. The report concluded that a key purpose of the OWN program was to enrich the Schlox family, noting that interviews and corporate filings indicated they own and manage Bevel and Armada.
On this news, EquipmentShare's stock price fell $1.58, a decline of 6.62%, closing at $22.30 on June 24th. The stock continued to decline the next trading day, falling $2.61, or 11.7%, to close at $19.69 on June 25th. By the commencement of the action, EquipmentShare stock had traded as low as $16.06 per share, a decline of more than 34.5% from the $24.50 IPO price.
Plaintiff argues that the registration statement for the IPO and defendant statements during the class period failed to disclose several critical facts. Specifically, plaintiff alleges that EquipmentShare participated in additional undisclosed related party transactions, that it had not terminated or substantially reduced transactions with entities owned or controlled by the co-founders, and that its financial statements were materially misleading as a result.
Robbins LLP is now investigating whether EquipmentShare made false and misleading statements in connection with its IPO and throughout the class period. If you purchased EquipmentShare shares during the class period, you may be eligible to participate in the class action. Some investors may also choose to seek appointment as lead plaintiff, the representative party who helps direct the litigation. And representation is on a contingency fee basis. Shareholders pay no fees or expenses.
That's today's update. Thanks for joining us on the Robbins LLP podcast. Stay informed, and we'll see you next time.